Okay, here we are. We are live. This is Jeremiah Conger tuning in from annuityassociation.com. And today we're going to be bringing back another exciting unbiased annuity review. Today we're going to be discussing the Athene Protector Fixed Indexed Annuity. Now, this is a fixed indexed annuity with a shorter what they call surrender period. This annuity comes in two different versions, a 5-year version and a 7-year version. And we're really starting to see some new offerings in the fixed indexed annuity space with shorter time commitments, shorter durations of time that are required to keep your money in the contract. So what does a surrender term mean? Basically, when you buy an indexed annuity, because of there being no market risk and you receive a contractual guarantee of 100% principal protection, the insurance companies require you to leave your money in there for a stated amount of time in the contract. So in this particular product, we're going to be looking at the 5-year and 7-year surrender period product in the Athene Protector Fixed Indexed Annuity. And I think this is great that we're starting to see a shift in the market where there are some shorter surrender period products being offered. And you know what? They're very competitive from an interest growth perspective and the potential that's available in these indexed annuities, even though they do have a shorter duration of time that you're committed to. Typically in the indexed annuity world, you would find usually a 10-year surrender period to be about average. And there are some out there with as high as 15-year surrender periods. And before, the lowest that we could find on the market that would still offer a competitive growth potential would be usually in that 7-year space. But just recently, within the last handful of months, we're starting to see some 5 and 6 and even more 7-year products hitting the market and becoming more and more attractive for those looking for a lesser time frame to commit to. So before we get started, I'd like to just start off with some gratitude. If this is the first time you're watching one of our annuity reviews, our premise and really primary goal here and mission at Annuity Association is to help bring more transparency to the annuity buying experience and to help ultimately you as the consumer to understand and be able to compare these products so that you can ultimately make an educated decision on whether or not an annuity is right for you, and if so, which one's going to help you meet your needs, goals, and objectives in the future. So we're doing our best in terms of bringing that transparency directly to the marketplace, and I have to say that I'm very thankful for the opportunities that I have using these platforms like YouTube and Facebook and all of the other social media platforms to really bring the message to the marketplace to help you guys really understand these products inside and out, understand the features, the benefits, the fees that may be associated with them, and ultimately help you, make a full comparison between the various products on the market to help you make a good decision. And, at the end of the day, there's hundreds of these fixed indexed annuities on the marketplace. Not all of them are created equal. And so how do we really help somebody make an educated decision on whether or not one's right and then which one specifically is going to help them address their goals, needs, and objectives moving forward? So that's the design of these reviews. I am an independent advisor. I'm not tied to one company or one product. I work with every major insurance company. And so my job is to really just help you understand these products and give you the data that you need to understand them, feel comfortable with them, and go into these applications to apply for the product if you decide to move forward with full confidence. So before we get started, if you'd like to work with me directly, I work with clients in all 50 states. I'd be honored to have the opportunity to help guide you in the right direction. You can visit our website at annuityassociation.com. Right there on the main page, click the green button to request your free report, and I will get in touch with you in a timely fashion. Okay, before we get started, let's go ahead and dive into our handy dandy disclaimer. So bear with me. I'm going to go ahead and share my screen. If you haven't done so already, you can enlarge your viewing window by clicking in the bottom right-hand corner of your viewing window at this time. and there should be a little box icon that you click, and from there it will enlarge your viewing angle. Okay, so again, we're talking about the Athene Protector 5 and Athene Protector 7 fixed indexed annuity. This is an independent review, unbiased, brought to you by annuityassociation.com. This is a review, not a recommendation to buy or sell an annuity. Athene has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have any specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Okay, so what we do in these reviews, if this is the first time you're tuning in, is we will take a look at the product brochure to start. We'll cover all the features and benefits in the product brochure that's official from the insurance company. And then in addition to that, we'll dive into our software that we use here at Annuity Association to take a deeper dive into the specific index crediting strategies and even go through what we call a hypothetical back test to see how those index strategies rank in order of highest opportunity for growth to lowest. And then we'll look back over the last 10, 15, and 20-year periods to see how the individual index strategies would have performed if we owned those products during that time frame. Now, I must make the disclaimer that prior performance is not always the best indicator for future performance. So, but just keep in mind that it does give us some level of understanding of what these index strategies and the crediting methods that are offered inside the annuity, gives us an idea of what they could potentially do if markets were to perform similarly to how they have over the last 10, 15, and 20 years. Okay, so let me go ahead and share my screen. We'll get started with the brochure. And then at the end of this review, we're also going to be taking a look at a hypothetical illustration, just showing you an example of how this product would look on a ledger and, kind of help you navigate and understand, all the columns and factors that are associated with the growth components of this annuity. Okay, so let's see what's going on here. All right, share my screen. And we're back into the brochure. Here we go. All right. One thing about Athene that I do enjoy is their brochures are usually pretty colorful. Always have beautiful animation, logos, and designs in the background there. Really am a fan of that. So Athene and the Athene Protector fixed indexed annuity is all about offering peace of mind for the journey ahead. This is, again, a fixed indexed annuity, and the unique feature that I've discovered right off the bat is that it does have a built-in return of premium guarantee. So I will be covering exactly what that entails for you just momentarily, so stay tuned. So Athene is a different kind of company. At Athene Annuity and Life Company, a subsidiary of Athene Holdings Limited, they know that unconventional times demand unconventional thinking. Athene is driven to deliver innovative solutions that help you outperform in their increasingly complex financial world. A leader in annuities, the Athene group of companies embodies strength and stability now and in the future. Their drive, discipline, and confidence can help you achieve more. So Athene is one of the largest providers of fixed and fixed indexed annuities in the United States. And as a matter of fact, according to some independent research, Athene came in #1 for 2020 for fixed indexed annuity sales. So they are the big dog. They are the leader at this time and have been also several years in the past. And, when it comes down to working with Athene, they are very focused on being innovative in the indexed annuity space. And I would consider them to be a leader, not just from a sales metric perspective, but also from the indexes that they offer, the crediting strategies that they offer, as well as the unique features and bonus offerings that they also provide from time to time. Athene does trade on the New York Stock Exchange under the symbol ATH. They were founded in 2009, and through acquisition, they've acquired several companies that now has served customers for more than 100 years. They do offer policyholder protection, and that is a priority for them, and it always will be. And at the time of this brochure, the illustrated brochure here shows that American Equity and its sister companies manage total 202.8 billion, in assets, 202.8 billion in total GAAP assets. And the financial strength ratings at the time of this brochure is A, and I did receive communication just recently that they were upgraded to A+. So that's a good thing there. So we're working with a very financially stable organization with Athene. So why would one choose an annuity? Annuities are designed to help you achieve your goals for retirement savings and income. They provide insurance against major financial risks like outliving your assets. So annuity is a general word, it's a general term. There are 5 different types of annuities out there on the independent marketplace. This happens to be just one. It's a fixed indexed annuity. Fixed indexed annuities are known for offering a 100% contractual guarantee of principal protection, which means you are never exposed to market risk. In the event of a market decline, you will never experience a loss to the monies that are inside of the annuity. So if you're on the market for a safe interest alternative and you're not finding it in the traditional vehicles like bank certificates of deposit, money market accounts, bonds, and you're looking for a vehicle that's going to give you a fair rate of return or the opportunity for a fair rate of return, but still shielding your assets from that volatility and from those market risks that are often associated with the stock market, then a fixed indexed annuity is something that you should be considering at this time. They are a great vehicle for doing just that. And whether you're looking for just safe accumulation or lifetime income, a fixed indexed annuity can serve both of those needs very, very well. And one of the questions that we get is, why aren't more people doing these? Well, the answer to that is they are. Almost $60 billion were invested in fixed indexed annuities last year in 2020. So it was just over 58 billion with a B that was invested in a fixed indexed annuity across the entire country. So there are a lot of people doing these. And at the time, given the low interest rate environment, this is a better time than ever to consider one for your retirement. Take control with Athene Protector. It takes years of commitment to build your retirement nest egg, but what if something happens along the way to force a change in plans? With an Athene Protector fixed indexed annuity, you can save confidently for retirement, and you'll rest easy knowing your money is there if you need it. Whatever life sends you, consider these features. So the first off, the one that stands out is the return of premium guarantee. There are several other indexed annuities that offer a return of premium guarantee, but it's not as common of a feature. But I do appreciate the products that offer it because retirement is dynamic, and at times you may need to pivot or change, or maybe have a change of heart. And if that is the case, a product with return of premium is going to give you essentially a refund of your initial premium investment without incurring any costly fees to exit the contract early. Minimum interest credit guarantee is another unique feature here we'll be covering momentarily. Up to 10% penalty-free withdrawals, confinement and terminal illness waivers, growth potential based in part on the performance of an external market index, protection from downside market risk, and tax-deferred interest accumulation. So the return of premium benefit is built in for a charge. So there is a fee associated with this product to have that feature. We'll be covering the cost of that fee here momentarily, so just stay tuned. And the Athene Protector will also allow you to take control with 3 important guarantees. You're looking for a secure way to boost your retirement savings, but you also want options in case your plans change. The Athene Protector provides guarantees to help you get there. The first of the 3 guarantees is the guaranteed return of premium. It's a built-in return of premium benefit for a charge, and it provides you with the protection from unpredictable circumstances. You can surrender your annuity at any time during the withdrawal charge period and receive your initial purchase premium, less any prior withdrawals. The return of premium benefit is not available after the withdrawal charge period has elapsed. The guaranteed minimum interest credit is the second guarantee, and that is if the total interest credited to your annuity's accumulated value is less than the minimum interest credit at the end of your withdrawal charge period, you will automatically receive a one-time interest credit equal to the difference. The minimum interest credit is based upon a percentage of your initial premium, less any withdrawals that have been taken. And the third guarantee is the guaranteed protection from downside market risk, and that is the indexed interest crediting strategies in a fixed indexed annuity guarantee that your annuity's accumulated value will never decrease due to market performance. So once your interest credit has been given, it is locked in, and even if the markets were to move downward in any given year, any interest that you've accrued at that time and that's been locked in, plus your initial investment, is protected and shielded from those downside risks. You will never lose a penny due to market declines. So you can grow your nest egg with multiple interest crediting strategy options. The indexed strategies are covered here, and that is the Athene Protector annuities offer a selection of one-year index crediting strategies. These give you the potential to earn interest based in part on the upward movement of a stock market index. The interest you earn in a particular strategy is credited at the end of each contract year, and you're guaranteed to never earn less than 0% interest. And then they also offer a fixed strategy, which works just like a fixed rate account or what have you. The fixed strategy provides a guaranteed rate of interest that is credited to your annuity daily. Athene declares the guaranteed rate for this strategy each contract year. So we'll be taking a look at the fixed rate that's offered in this product here momentarily, and it is renewed on an annual basis. So for example, let's say it was 2% this year. Upon your anniversary date after the initial year, you'll receive communication from Athene that will state whether or not the fixed rate moving forward for the next year will be 2% or if it will be lower or higher. They'll give you communication on that. Okay, so moving on down. The Athene Protector gives you the opportunity to grow your annuity's value and lock in gains. Your money is not directly exposed to the risk of the stock market or individual stocks. Athene guarantees you will not lose money due to stock market risk or losses, So essentially, these index crediting strategies that are offered in these indexed annuities, they're just used as the methodology in terms of how your money accrues interest. They're more used as a strategy that they go by and they follow, and then based on how the index performs, that's how they credit you interest. Your monies are not directly invested in the index itself or any other part of the stock market for that matter. Your money is always safe with the insurance company sitting in their reserve account so that you're never exposed to those market risks. So here they're giving an example of the Athene one-year point-to-point index strategy using the S&P 500. And you'll see that here is in the dark blue line. And then you'll notice the S&P 500, which is the benchmark index for the stock market, in the lighter shade of blue. And what they're illustrating here is how that shield from market volatility works, and then also how the lock-in mechanism works once your interest has been accrued and locked in. So you'll notice that the lighter blue shade of the line, it looks just like a regular stock market graph here, where it's up and down, up and down. It looks like a heart rate, if you will. And you'll notice the dark blue line never goes down. It either goes up or it goes sideways. And it looks like a staircase, sort of. So basically what that's showing is that in the years that the market is positive and the index strategy was positive, then you're getting upward movement on your account value or accumulated value because of that interest credit being earned and locked in. And then you'll notice, for example, down here where I'm hovering with my mouse, you'll notice that when the lighter blue line is down, that the darker blue line is just going sideways. And that's just indicating your principal protection that you're contractually guaranteed that in the event a market decline does occur, your interest is just 0%. So that's why the line is flat. So one other feature that is often overlooked, and I don't believe they will talk about it in this brochure, so that's the reason why I am bringing it up, is what they call an annual reset period, or the feature that's called the reset. In an indexed annuity, one of the unique features that I feel is often overlooked is what's called that reset feature. And a reset basically is the upon your anniversary date for your crediting method. So in this example, it's a 1-year point to point. Let's break that down first, what point to point means if you're not familiar with indexed annuities. Basically, what point to point means is on the date your policy or your annuity is issued, okay, after you've applied for it and funded the annuity, you will get an issue date. On that issue date, the insurance company will provide you communication in your policy that will state the starting point or the starting value of the underlying index you're allocated to. So in this example, if it's the S&P 500, on the day your policy was issued, they're going to jot down in your policy what that value was of the index at that time. And that is your starting point of the point-to-point strategy. Fast forward 1 year, on your anniversary date for 1 year, they're going to also send you communication that indicates your ending point of the index. And if the ending point or the ending value of the index on the date of your anniversary is higher than the starting point, well, then you had positive growth. And that positive growth will then indicate you're going to receive interest based on the crediting strategy. So that alludes to the reset features. So let's say one particular year, your starting point and your ending point's actually lower than your starting point was. So that would look like something on this chart here, where I'm highlighting with my mouse. Let's say you had a negative performance for 1 year. Well, you're going to get a 0. You're going to get credited a 0. You can never have a negative performance in any given year, so you'll never lose money, but you're just going to get a 0. But the very next year, because it's resetting, okay, you're going to receive communication again of what your starting point is for that year, for that index, and for that 1 year coming up. And now the starting point is low because the previous year ended at a low. So now your starting point is low. So that's your new starting point for the second year of your contract. Therefore, if the markets go up or the index strategy does go up, you're most likely going to accrue interest because your ending point will be higher than the starting point was. And that is the reset. Essentially, what I'm trying to explain is that you don't have to wait for the index strategy to break even again before you're ever going to be credited interest. Because of that annual reset, you start where the low point is. You don't have to wait for it to come back to where it was the previous year before you get interest again. You're starting at that new low point, and that means that if it does go up from there, you're going to earn interest. So I feel like that's one of the most often overlooked features of an indexed annuity. It's one that's definitely not talked about enough, and I try to bring it up on every one of these reviews because I think that that's key to understanding the growth mechanics of these products and how they differentiate from just being in the stock market. If you were in the stock market on the S&P 500 index and 1 year you had negative performance, well, you're going to be, losing some money because of the negative performance, but also to break even, you're going to have to wait for that index to grow again and get back to where you were before it went down. Well, in an indexed annuity, you don't have to wait for that. You get to take advantage of the annual reset that starts at the lowest point, and then you get to a higher opportunity to earn positive growth that year because you're starting at the low period. So I hope that makes sense. It's definitely an overlooked feature of an indexed annuity. Okay, moving on. So here's some additional features for added peace of mind. Like most fixed indexed annuities, there are free withdrawals in the Athene Protector 5 and Athene Protector 7. Beginning in the first contract year, you can withdraw up to 10% of your annuity's accumulated value each contract year without a withdrawal charge. Required minimum distributions are our IRS mandatory withdrawals required with qualified contracts such as an IRA. These withdrawals from your annuity contract are considered part of your free withdrawal and are free of withdrawal charges for the contract year. The bailout feature is flexibility and protection. If Athene ever lowers the declared one-year point-to-point index strategy annual cap rate below the bailout cap rate, you'll have full access to your annuity's accumulated value, free of any charges for up to 30 days after the contract anniversary in which the bailout cap rate was pierced. After the 30-day bailout window, all charges may apply. So this is really Athene putting their money where their mouth is and trying to show people that they're not in this business to, do a bait and switch or anything of that nature. They're going to show you the cap rates, and they're also going to show a bailout cap rate. And if they ever renew a rate or change a rate and it's lower than the bailout cap rate, then they'll give you your money back. They'll give you the opportunity to pull out your money free of any withdrawal charges if you decide to do that. So definitely a good option there. And then the confinement waiver. This is one of the biggest misconceptions of annuities, is that you're tying up your money, and if there's an emergency due to healthcare cost, you can't access your money to pay for those. That's completely false. In most states, it's mandatory for the annuity companies to offer these types of features. And this is just one example. The confinement waiver means you can withdraw up to 100% of your annuity's value if you are confined to a qualified care facility. This benefit is available if you are confined for at least 60 consecutive days, anytime after the first contract year, and meet certain eligibility requirements. No withdrawal charges apply if you qualify for this benefit. You cannot be confined at the time your contract is issued, and confinement must begin at least 1 year after the contract date. They also provide a terminal illness waiver, again, addressing the liquidity needs should you need that for healthcare cost. Withdrawal up to 100% of the annuity's accumulated value if you are diagnosed with a terminal illness that is expected to result in a death within 1 year and meet eligibility requirements. No withdrawal charges apply if you qualify for this benefit. This waiver is available after your first contract anniversary, and the initial diagnosis of terminal illness must be made at least 1 year after the contract date. And the death benefit, which is another misconception of, sometimes people come to me and they say, well, I heard, if you buy an annuity and you die, the insurance company keeps your money. That is entirely false. There's only one type of annuity structured one type of way that would ever involve that scenario. 99% of all other annuities have a death benefit that will pay 100% of the accumulated value to your designated beneficiaries in your contract. There are no penalties, there are no early withdrawal charges, etc., even if you were to pass away within that 5 or 7 year period for this specific product. So your annuity can offer your loved ones a quick source of funds to settle matters after your death. Your beneficiary is guaranteed your annuity's full accumulated value, minimum guaranteed contract value, or return of premium benefit, whichever is greatest. They do also offer the minimum guaranteed contract value, which ensures you'll receive a minimum interest crediting rate on a percentage of your premium adjusted for withdrawals while the contract is in effect. So they are offering you a minimum guaranteed value, which is, again, another way of Athene saying, hey, look, we're here to help you grow your money. And worst case scenario, if for whatever reason the index strategies don't perform, there's still a minimum interest crediting rate that's being applied to your premiums adjusted for any withdrawals if should you be taking withdrawals out of the annuity for whether it be RMDs or just free withdrawals during the 5 year or 7 year period. And then contract surrender. If you decide to surrender your contract, Athene will pay you the contract's cash surrender value. the cash surrender value is equal to the greatest of the following values as defined in your contract: the accumulated value less any applicable withdrawal charges, the minimum guaranteed contract value, and the return of premium benefit during the withdrawal charge period. So here's some other important information to have on hand. Athene Protector annuities are designed to meet your long-term savings and retirement needs. They include a withdrawal charge period. If you withdraw more money than the free amount allowed by your contract, or if you surrender the annuity before the withdrawal period ends, a withdrawal charge may be applied. These charges do not apply to free withdrawals, required minimum distributions, payments made in settlement of your annuity's death benefit, or confinement and terminal illness waivers. Withdrawal charges: if you surrender your annuity or withdraw an amount that exceeds the free withdrawal amount during the withdrawal charge period, you will incur a withdrawal charge. In part, withdrawal charges allow the company to invest your money on a long-term basis and generally credit higher yields than possible with a similar annuity of shorter term. For more information, see the product details insert provided with this brochure. And the rider charge. A return of premium rider is included with the Athene Protector fixed index annuities and is automatically elected with the purchase of the annuity contract, so it is mandatory. A rider charge is deducted monthly from your annuity's accumulated value during the withdrawal charge period, beginning on the rider effective date. The rider charge is calculated as a percentage of the accumulated value, and the annual rider charge rate is declared in your contract. Refer to the Athene Protector Certificate of Disclosure rate insert for the current return of premium annual rider charge rate. So we'll be looking at that rate here just momentarily, so stay tuned. And it looks like that's going to cover the rest of this brochure. So let's go ahead and dive in to the software version of our review, where we're going to take a look at the index strategies that are offered in the Athene Protector 5 and 7 year versions of this product, to see how they stack up when looking back over the last 10, 15, and 20-year periods. Before we dive into that, if you're getting some value from this review, please give us a like or thumbs up. If you have any questions, feel free to comment here on the video. I'll personally, reply back and see how I can answer that and address that question that you may have. And if you'd like to work with me directly, I'd be honored to do just that. We utilize a virtual process using a secure video chat like Zoom. And if you'd like to do that, I work with clients in all 50 states. You can go to annuityassociation.com. Right there on the main page, click the green button to request your free comparison report. And you'll be taken to a series of opt-in questions. One of those being, would you like to be contacted by an advisor? Simply answer yes, and I'll reach out to you in a timely fashion to see how I can help you point in the right direction. And then also, if you'd like to just compare this annuity, whether maybe you're thinking about buying this one or you currently own another type of annuity that's maturing and you're looking to possibly roll that into a different product, or you're being pitched this product from somebody and you're really wanting to do your due diligence to figure out if this is the best one available for your particular needs. That's exactly what we do here, is compare all the annuities on the marketplace to help you understand them. And if you'd like to do that, that's something we can also do as well. Again, just go to annuityassociation.com and we can get in touch. Okay, so let's go ahead and pull up our software and we're going to go ahead and dive in. So what we're looking at here is our hypothetical backtesting exercise. What we do is we take a look at all of the index strategies that are available in the particular annuity, and then we backtest them and look at how they would have hypothetically performed over the last 10, 15, and 20-year periods. So you'll see right here at the top of our screen, we'll see the Athene Protector 7 coming in number 1. These are all listed in chronological order from highest to lowest according to the annualized credited rate for the 10-year period. So we see Athene Protector 7 with the 1-year NASDAQ FC point-to-point with participation rate strategy. The current participation rate at the time of this review is 50%. And based on that participation rate, we're looking at a 5.28% average annualized credited rate of return. during that time frame, which is December 31st of 2010 to December 31st of 2020. Now, just below that 5.28%, you're also going to see a green and red number. And what this is doing is looking back over the last 20 years and identifying which was the best 10-year performance under or over the last 20-year period. So 5.28% happens to be the best 10-year period from December 30th of 2010 to December 30th of 2020, 5.28%, which is an annualized rate of return. And then the worst 10-year period, still a positive credit here, just the red indicating the worst 10-year period, happened to be from December 30th of 2005 to December 30th of 2015, and we're looking at a 3.53% rate of return. So not bad, even going through the global financial crisis of 2007 and 2008. Now, if you're new to fixed indexed annuities and you're not familiar with what participation rate means, participation rate is basically the indicator of how much of that index's performance for that given year, that 1 year period of time, how much do you as the consumer or annuity owner, how much of that performance do you participate in? So, for example, if the index, the NASDAQ FC index in this case, over that 1 year period performed at 10% positive growth, and you had a 50% participation, that means you participate in half of that 10% growth, essentially 5%. So you would receive a 5% credit if the NASDAQ FC index performed at 10%. So pretty easy to understand once you break it down. Now we do have the required rider fee showing here, so might as well cover that. It's listed here in red at the time of this review. The required rider fee in the Athene Protector 5 and the Athene Protector 7 is 40 basis points, or almost 0.5%, so 40 basis points. And that's the rider fee required, and it does include the return of premium guarantee. Okay, so over the last 15 years, that 1 year NASDAQ FC point-to-point with participation rate shows an average rate of return, annualized rate of return of 4.66% from December 31st of 2005 to December 31st of 2020. Okay, the second index that comes up on the list in the Athene Protector 7 is the 1 year BNP Paribas Multi-Asset Diversified 5. Participation rate, it is a point-to-point strategy, and the participation rate offered on this index strategy at this time is 80%. So again, if it went up 10% in the year, you would earn 80% of that 10%, netting you an 8% interest credit for the year. Over the last 10 years, we'll see 5.02% average annualized rate of return, 5.4% on the highest 10-year from December 30th of 2009 to December 30th of 2019, and the lowest 10-year performance from December 30th of 2005 to December 30th of 2015 of 4.18%. Over the last 15 years, we're looking at 4.3% average annualized rate of return. And then here's the Athene Protector 5 coming in, and their 1 year NASDAQ FC participation rate, point-to-point strategy. The participation rate you'll see drops to 42%. So the rule of thumb in these type of indexed annuities is the longer surrender period that you commit to usually will equate to a higher participation rate on the index strategies. So you'll notice that is the case here. The 7-year strategy offered a 50% participation rate on the NASDAQ FC 1 year point-to-point, and the Athene Protector 5 is a 42% participation rate. So with that decrease in the participation rate, we'll see a 4.45% average annualized rate of return over the last 10 years. Again, that being the highest 10-year period over the last 20 years, 4.45%. And the lowest 10-year period over the last 20 years is 2.98%. And the average annualized rate of return on the 15-year is 3.93. I always, advise my clients, when we're looking at buying an indexed annuity, don't make your decision based on the best case scenario. Make it on the worst case scenario. So right here in this exercise, we're giving you that potentially worst case scenario. I mean, these dates are taking us through, some of the more difficult times in our economy in recent years. This particular time frames December 30th of 05 to December 30th of 2015. And that's when we went through the global financial crisis of 2007, 2008, where the markets were down 40% or more. And, if you can really take a look at that time frame, and maybe you were in the market back then and maybe you experienced a loss, and remember how that possibly made you feel. And now consider it now if you are retired or looking to retire, knowing that even if you went through that worst case scenario, you're still going to come out with a 3 to 4% potential rate of return during that 10-year period. Make the decision on whether or not you're comfortable with that. And if you're comfortable with that scenario, then maybe take a deeper look into that product and how it can further serve you. But don't make your decision on just the best case scenario. That's not the right way to go about, navigating that decision process. Okay, so then we see the Athene Protector 5, the second highest crediting strategy offered in the 5-year version is the 1-year BNP Paribas Multi-Asset Diversified 5, point-to-point with participation rate. We'll see the par rate drops down to 70% versus 80% in the 7-year product. And the average annualized rate of return over the last 10 years is 4.4%. And the highest hypothetical performance over the last 20 years is from December 30th of 09 to December 30th of 2019 with a 4.73% rate of return. And the worst case scenario, worst 10 years over the last 20 years, December 30th of 05 to December 30th of 2015 at 3.66%. And the average rate of return over the last 15 years, hypothetically speaking, is 3.76%. They do offer a third strategy in both of these 5- and 7-year versions of the Athene Protector Fixed Index Annuity, that being the AI-powered U.S. equity point-to-point with participation rate. The par rate on the 7-year version, 67%. And we're looking at a 4.22% average annualized rate of return over the last 10, 5.02% highest 10, and 4.22 lowest 10, 4.35% average over the last 15 years. And then a fourth index strategy, which is very attractive. When I'm looking at indexed annuities, I like those products to have at least 3, if not 4, strong index strategies inside the product. Specific indexes, 3 to 4 different unique indexes. And the reason for that is it adds a layer of diversification and flexibility and optionality moving forward. Because these are longer term commitments, we want to make sure we're not putting all of our eggs in one basket, and that we have multiple index strategies to choose from down the road. Now, why that's important is because you can reallocate your money every single year in this product. If it's a 1-year point-to-point, upon your anniversary, you're going to receive communication from Athene, and they will ask you, here is your current index strategy and how it's performed. Here are the available indexes. Would you like to reallocate? You can do that. And oftentimes in the right product, if they do offer very attractive, 3 or 4 very attractive index options, I usually will advise to put some money, allocate some to each index strategy. If it was 100,000 and you have 4 strong index strategies, put 25,000 each towards each, index strategy. Why not? It adds a very diversified layer, and it gives you just that much more opportunity that you'll never have 1 year of 0 gains because you have 4 different indexes working for you. So I like that about this product. I like that about Athene's products in general. They do typically offer 3 or 4, sometimes even 5 very strong index options. And this is just an example of that. So here is the fourth one, the 1-year S&P 500 daily risk control 5% total returns index with the point-to-point strategy and participation rate. This is a 75% participation, and we'll look back over the last 10 years at 3.7% average annualized rate of return when doing the back testing, 3.93% highest 10, and 3.7 lowest 10. And that also is available. The AI powered is available in the 5-year version with the 57% par rate, 3.6% over the last 10, 4.28 highest 10, 3.6 lowest 10, 3.71 last 15. And that S&P 500 daily risk control 5% is in here as well. 65% par rate, 3.2 over the last 10, 3.41 over the highest 10, and 3.21 over the lowest 10. And then last but not least, they do offer the traditional S&P 500 point-to-point with a cap. Not a bad offering here, honestly. The cap is set to 4.55%. This is the traditional S&P 500 benchmark index. And we'll notice that based on this cap rate, which if you're not familiar with what cap rate means, cap rate is essentially the ceiling. How much of the performance are you capped at? So again, using the 10% performance in any given year, let's say the S&P 500 index went up 10%. Well, if you have a cap, the most you'd be credited is that cap amount. In this case, it'd be 4.55%. So with that cap rate over the last 10 years, this product would have performed at an average of 3.16% over the last 10 years. 3.37% in the highest 10 years over the last 20, and 2.91% lowest 10 over the last 20, 3.25% over the last 15, and 3.04% over the last 20. And then rounding out the bottom here in the Athene Protector 5 is the 1-year S&P 500 point-to-point with a cap. The cap is 4%, and because of that lower cap, it would be 2.78% average 10, 3.04 highest 10, 2.64 lowest 10, 2.89 over the last 15, and 2.71 over the last 20. So this product really gives you kind of a bond alternative type of return. Given the low interest rate environment, this is very suitable to consider, if you're looking to, pretty much do what bonds were intended to do, and that was de-risk a portion of your portfolio and provide a stable rate of return. This annuity, given the 4 and 5 different index options available, can be a suitable bond alternative, but obviously speak with a financial professional to dig into that further. All right. Let's see if we are able to illustrate this product and see if we can go ahead and round out this review with an example illustration. Not quite sure if this one's available just yet, but I will take a look. Bear with me. Okay. While we do a search here, let's see what comes up. One other thing that we didn't cover, let me go ahead and do that before I do forget about that, is the current fixed rate. So they do have a fixed account in this particular product. At the time of this review, the current rate is 1.8%. Again, that is an annual renewable rate. And the max issue age for this product is 83 years young. And let's take a look at the surrender charge schedule for the 7-year. Starts out at 9% year 1, ends at 2.7% at the 7th year. After 7 years, it doesn't mean you have to roll out of the product. You can keep the product month to month or year to year, and you're just no longer in contract to where you have to keep your money in. And if you pull it out, there's no surrender charge after that 7th contract year has been fulfilled. And on the 5-year version, we'll take a look at that one. Max issue age is 85. Withdrawal charge schedule, 8% starting year 1, 4.68% year 5. So what that means is if you withdrew above 10%, which is the annual free withdrawal provision, anything above 10% of your accumulated value would result in a surrender charge of 8% in year 1, 8% in year 2, 7% year 3, 5.9 year 4, and 4.6 year 5. After year 5, there's no surrender charge penalties whatsoever. Okay, so it doesn't look like I have the ability to illustrate this one. I was hoping that I would, but unfortunately it's not available, but I can always request an illustration if you're interested in doing that. If you have any questions you'd like to ask, feel free to do so in the chat here, or you can visit our website if you'd like to work with me directly. I work with clients in all 50 states. My job is to help you better understand these products to ultimately make an educated decision. If you'd like to go through that comparison process, it's absolutely free of charge. You can visit our website at annuityassociation.com. Right there on the main page, click the green button to request your free report. And at that time, you'll be taken to a series of opt-in questions. One of those being, would you like to be contacted by an advisor? Simply answer yes, and I will reach out to you in a timely fashion. So that's going to wrap up today's review of the Athene Protector 5 and Athene Protector 7 Fixed Indexed Annuity. We appreciate you so much for tuning in. If you've gotten some value, please give us a thumbs up, or share this review with someone that you feel could also benefit from it. It helps our videos get ranked to just, help us achieve our mission, which is bringing more transparency to the annuity buying process. My name is Jeremiah Conger. Thanks so much for watching. This is, again, an unbiased annuity review from annuityassociation.com. Thanks so much. Take care of one another, and you have yourself a great day. Bye-bye now.